Yeah, good afternoon, all. Um, Thank you for joining today's session on finalization of books of account from GST perspective. And my name is Jagadeesh Kumar. I'm a chartered accountant. And for today's session, Venu sir may not be able to join. If time permits, he will join in the middle as he has to take the other session at ICI. So I will lead the today's session. GST part will be taken up by me, and the tech part will be taken up by Delhi Babu sir. And coming to these webinars, sorry. Okay. Uh, yes. Now coming to these webinars, we have been doing conducting these webinars since from implementation of GST. So I'm happy to share that this and today's session. This is the 93rd session we have been doing after introduction of the GST. So thank you all for your support uh, uh, by giving encouragement by way of joining and registering for these webinars. And coming to this today's topic, finalization of books from GST perspective, as we are at the end of the July month, so many of you must be in the process of finalizing your books of account. So we thought this is the right topic to choose for this month. So that way we have chosen this topic for this month. So now getting into the topic, in today's topic will be divided into two parts. The outward, which we'll discuss about the revenue part and how to deal with that revenue in the books of accounts and in comparison with the GST returns. And next to that, we'll discuss about the inward part, that is expenses reconciliation and the input tax credit and how to deal with the input tax credit, how to reconcile, and all the things we'll discuss in the second part. And in the last, we'll see the RCM implications and what are all the expenses RCM liability attracts and how to deal with the RCM input tax credit, all that we discuss in the RCM. And in the last, we'll see the book adjustment entries. What are all the adjustment we have to uh, pass in your books of accounts while finalizing your books. So starting with the outward revenue part, just a second. Is my audio is clear, audio and video? If I just put it in the chat box.
Yes, it's clear.
Yeah, okay, fine. Thank you. So coming to the revenue part, supply can be anywhere. Yes, uh, the turnover for the financial statement and the turnover for the GST might not match because the financial statements will be prepared based on the gap, generally accepted accounting principles, whereas GST is driven by the um, time of supply provisions. So because of that, there will be a turnover mismatch. And coming to the financials, turnover resides only in the credit side of the P&L account. But for the GST, it can be anywhere. It can be on the credit side of the P&L account or the debit side of the P&L account or the asset side. Coming to the balance sheet part, it can be at asset side of the balance sheet or the liability side of the balance sheet. And sometimes in certain cases, it can be out of the financial statement also. So we'll discuss about all these in detail, each part. Now coming to the first credit side of the P&L account. Obviously, our main focus will be on the operational income, that is on the direct income. We'll not give much focus to the other income. So this is where many taxpayers are missing to pay GST on the other income. In the other income, you might have the miscellaneous income or discounts received or incentives received for achieving the sales target. On all these, you check the GST implication on other income also, not only on the direct income. You focus while closing your books of account, you focus on other income also. Test the each transaction whether it is liable to pay GST on the transaction or not. If not, why? So you scrutinize each of the transaction in detail while closing the books of accounts. And now this is a part of the credit or penal account. Most of the 99%, 100%, I can say 100% of people will discharge liability what is appearing on your credit side of the P&L account. Now come to the debit side of the P&L account. The debit side of the P&L account, let's say I will take a small example in here. Let's say I incurred 10,000 rupees as an transportation expenditure. Out of 10,000, I have recovered 8,000 from my customer for transporting, for delivering those goods. So what I have done here, instead of recognizing that 8,000 in my P&L account, I have set off with my expenditure. So out of total 10,000 expenditure, I have adjusted 8,000. I mean, I have created my expense ledger, transport ledger. What it means? This is a turnover for the GST, right? But it will not appear in my the, credit side of the P&L account. P&L account. This is where many taxpayers are missed to pay GST liability on this. So you have to be more careful on the credits which have given to the expense ledgers. So now coming to the balance sheet part, starts with the asset side. Sale of fixed assets. You may sell the fixed assets either for profit or loss. That is the book profit or loss. Um, if you are following the income tax, it depends on the written down value. But for the GST, you have to pay the GST on the transaction value, not on the profit or loss. Okay, if you sell the fixed assets for profit, only the profit will appear in your credit side of the P&L account, not the whole the transaction value. So for purpose of GST, you have to pay the tax on the transaction value, not on the profit. So there is a confusion for some taxpayers that whether on what GST liability has to be paid. When not only on the transaction value, there is 18 subsection 6 that we will discuss in detail. Whichever is higher, we need to pay in case of sale of fixed assets. If asset is sold less than 60 months, that is less than 5 years. That we will discuss later in detail. So what I'm trying to highlight here is you focus on the asset side also. You take the balance sheet and open the fixed assets ledger. You scrutinize all your credits. Other than depreciation, you see what are all the credits we have given. If there is any disposal of asset or sale of asset, then you scrutinize whether there will be any GST liability on that or not. Now coming to the liability side of the balance sheet. So, okay, asset side is okay. What could reside in the liability side of the balance sheet? Advances. So, as you all know that in case of services, we need to pay GST on advances, whereas for the goods, we no need to pay any GST on advances, right? So, check whether there are any advances lies in your liability side of the balance sheet. If there are any advances, check whether those advances are received for the goods or services. If it is for services, ensure that GST has been discharged on it or not. This is the check you have to done while finalizing your books of accounts. So up to this, okay, all these transactions appear in your financials. But now coming to the outside of your financial statements. So uh, coming to the what can be there in case of outside my financial statement. So GST liability is all around. It can be anywhere, not only in the books, but can be outside in the books of accounts. So if you come to the stock transfer, if there is any stock transfers between your branches, if you have multiple GSTNs, then each of the GSTN will be the distant person for each of the registration. So in that case, if there is any transaction happen between those branches, in that case, for the purpose of GST, it will be treated as a supply. But you cannot find this in your financial statement. It will get knock off on consultation of your financial statements, right? So this transaction will not appear in your financials. How you can find this transaction? So with the help of e-way bill, you can find the stock transfers and also schedule one transactions. Though there is no consideration and some of the transactions will be treated as a supply, even there is no sale. Even such transaction, you identify it and ensure that tax GST has been discharged or not. Now, moving on to the, so for this reason, Just a second. Yes. For this reason, detailed review is necessary. Okay. Not only from the accounting perspective, but also through the lens of GST compliance, you have to test each and every transaction. So coming to the taxability part, uh, deemed supplies. Just before we discuss, in case of deemed supply, just ensure whether you have paid the GST or not. The same example we have taken the stock transfer between the branches, that also you ensure whether you have discharged GST or not. Now coming to the cross sell, what is this cross sell? If we have in multiple branches, if there are any internally generated services. Let's say I'm in Hyderabad and my head office is located in Bangalore, and my head office is uh, providing HR related services to me. In that case, it's an internally generated service, not they have procured from outside and providing the services to me. In that case, you check whether cross search has been done or not. For the purpose of GST, cross search has to be done in case of internally generated services. Similarly, the way recoveries, if there are any recoveries, ensure that GST has been paid or not. Coming to the classification, ensure that your service or good is classified correctly or not. And also the HSM code. It's a key role it plays a key role in classification. So just be careful in classifying your good or services. Now coming to the valuation. So valuation is the key. So in case of sale of vehicles, just before we discussed that, in case of sale of vehicles, GST has to be discharged on the transaction value, or in case if you have sold your vehicle before 60 months. So the input tax credit for the unexpired period has to be paid. Whichever is higher has to be paid. Let's say my transaction value is 1 lakh and I'm selling my vehicle within the 20 months and remaining 40 months is there. And for the 40 months attributable ITC, let's say total ITC I have availed 60,000. So 20 months got over. So remaining 40 months is there. On that 40 months, credit attributable is 40,000, right? So I have to discharge credit either on transaction value, that is 1 lakh or 1 lakh or 40,000, whichever is higher. So under GST, one more thing I want to clear here is under GST for every fixed assets, they have given a life of 60 months. It's a deemed assumption. For every asset, for the purpose of GST, they will consider as in 60 months as in life. So in that way, whether ensure that the valuation is done correctly or not. In case of discounts, if you have received any discount, it will go and sit in your credit side of the P&L. Test whether discounts has given by way of uh, credit note or the just an trade credit note, whether it is subject to GST or not. Just check that. Coming to the incentives. Incentives, let's take an example. If you have an achieved an sales target of 1 crore and you have received the incentives. So straight away you cannot recognize it as an income. Not paying GST is not correct. You have to pay the GST on the incentives. So open market value. So that about the open market value we discussed in the later slides about the valuation part. Coming to the time and place of supply. So place of supply determines the type of tax what you have paid. Be careful while determining your place of supply. So because by selecting a wrong place of supply, your recipient will get effect because he will not get the credit. So be careful while yes, ensure the correct place of supply as given for your supplies. And review of the debit notes. Here also I will take small example. If I have received the payment delayed from my customer, so for that reason I have charged the interest for him. If you see the section 15, the transaction value includes whatever your customer is liable to be pay, all that shall be part of your transaction value. So on the whole, you need to pay the tax. Let's say initially you have given invoice for the 1 lakh, and later for delayed payment from your customer, you have charged 10,000 as an interest. Okay. For the 10,000, you have to raise the debit note. Simply, you cannot recognize that 10,000 as an interest income. And assuming that interest is not subject to GST and GST is not required to be paid, this interest will be part of your principal supply. That is your actual supply. If that is taxable, then this shall also be part of the transaction value. This will also be subject to the GST. Right. Now coming to the credit notes. So when can I issue the credit notes? If you see the section 34 subsection 2, credit notes can be issued when there is a deficiency in your service, or there is a return of goods, or if you haven't charged an excess tax. Only in those cases you can issue the credit notes. But I have seen most of the taxpayers are issuing credit note adjusting their balances. Let's say if I am unable to recover from a customer, in that case I cannot issue simply the credit note to write off that party. So if I issue the, so that's if you issue the credit note in that case for the bad debts, it is not a valid credit note. The benefit what you get by issuing the credit note, that is, if you issue the credit note, your liability will get reduced, right? So if you issue the credit note for these things like bad debts. So later department will deny that credit note. The benefit of reduction in liability will not be given. Okay. So only for those conditions, what section 34 is saying, only for those situations only you can issue the credit note, like a deficiency of service or return of goods. Only in those cases you can issue the credit notes. Now coming to the time limit. So within what time I can issue the credit note? So if you see the time limit, credit note has to be reported in your returns on or before 30th November. So what's the uh, so what return I can file, the last return what I can file before 30th November? So 20th November. So if you see the 20th November, on 20th November, I can file the October month return, right? So what is the technical date then? What is the so 31st October will be the last date to issue the credit note. Let's say for the 24-25 financial year, I have to raise the credit note. What is the due date? So I can issue the credit note. I have to declare the credit note on or before 30th November. So in order to declare the credit note on or before 30th November, I have to report it in the last return. That is the October month return. So for October month return, what is the last date? So 31st October. Technically, in the act, it is given that the 30th November of the subsequent year, but technically you can write the credit note only up to the 31st October only. So for 24-25, you can issue the credit note only up to the last date to issue the credit note is only up to 31st October 2025. If you issue any credit note after that, it is not a valid credit note. The benefit of reduction in liability, initial at the time of filing return, you may get the reduction in liability, but later at the time of audit or the scrutiny by the department, they will deny that benefit. Clear? So moving forward, in case of having multiple registrations, so in case of having multiple registration, it will be called as a distinct person as per section 25. So you have to give the utmost care in case of related party transaction. If there is any related party transactions are there, you check whether ISD or process has been followed or not. So now ISD has made mandatory for common services which are available from the third parties. In case of cross-search, in case of internally generated services, the cross-search is still continuing. Stock transfer. Under GST, stock transfer between the branches, between the distinct persons is taxable. Ensure that GST is discharged on the stock transfers and valuation aspect. So check whether the related party transactions are valued correctly and open market value has adopted it or not. Coming to the TDS or TCS, these the GST TDS or TCS reconcile with the books and electronic cash ledger. I mean, after you TCS credit uh, will after filing the GST SM, you can claim the TCS credit, reconcile with the books and your GST R7. If there is any discrepancy between the TCS or TDS receivable in your books and to the return, you follow up with your vendor. Now, coming to the ITC 04, what is this ITC 04? To my knowledge, 90% of the taxpayers are not following or not filing this ITC 04. So, in what cases ITC 04 will come? We'll see. In case of job work, if I uh, send any goods to my job worker, then I need to file ITC 04 every off yearly. This ITC 04 is meant to track the movement of the goods from the principal to the job worker. So most of the taxpayers are not complying with ITC 04. They are not filing this ITC 04 form. This needs to be filed every off yearly. The turnover is more than 5 crores. So even now the portal is not for the older periods you can file it now because the portal is not restricting to file the ITC 04 for the past periods. If you have not filed this ITC 04, you please file it now. And also in the act there is no specific provision for not filing about the penalty or interest for not filing if this ITC 04. Anyway, department may levy the general penalty for not filing this ITC 04. Uh, so, uh, if check whether there is any movement on whether we are sending or your client is sending any goods to the job worker for contract manufacturing or some other. Ensure that ITC 04 is regularly every offer is filing or not. Now, if you are engaged into the export, having LUT in place, check whether you have an LUT or not. Now, without LUT, you cannot file the shipping bill. But 2 years before, without LUT also, you can file the shipping bill in the ISGate. So recently, though this is a procedural compliance, but the small procedural compliance, non-complying of this procedural thing will land you into the big trouble. So recently we have seen in one of our client issue is that his yes, his turnover is 800 crore. He has exported in the year of 22-23 without having LUT, and later he claimed a refund under export of it under export without payment of tax, and department has rejected the application for not having LUT. Not only rejection, later they have issued notice for not having this LUT and proposed the 18% liability on the total 800 crore turnover. So the demand itself coming around 140 crore. And anyway, for to file an appeal before appellate to the first appeal, we need to make a 10% pre-deposit, which is coming around 14 crore. So though this is a small procedural thing, but non-complying of this small thing landed him into the big trouble. So ensure uh, this, in case of exports are there, ensure that LUTs renewing every year. Coming to the export of services, if you are engaged into the export of service, ensure that you have released your inward remittance within the period as specified by the FEMA. Generally, as per the FEMA rules, you have to get the realization within the 9 months, or you can get an extension of 6 months more. So within 1 year, 3 months, you have to get the realization in case of export of service. Otherwise, there may be a chance of rejecting the zero rated benefit to you. So if you have made the export of service without payment of the tax, department may propose to levy tax on the zero rated supplies. Now coming to the supply to the SEZ, this is the main thing. So earlier mere supply to SEZ is a zero rated supply as per section 16 of IGST Act. So now with effective from 1st October 2023, they have inserted the word called authorized operations. Okay. So from 1st October 2023, we need to, yes, hello. Yeah. So earlier mere supply to SEZ is a zero rated supply, right? So, but from 1st October 2023, we need to prove that our supplies are used for the authorized operations. So they have inserted the word called authorized operations in the section 16 of IGST Act. So from 1st October 23, we need to get the endorsement from the SZ unit or developer, the stating that they are using our services only for the authorized operations of that unit. Without that, you will not get the zero rated benefit. So definitely later department will propose tax on that. So in many cases, though this amendment came from 1st October 2023, but department is proposing to pay tax for the older period also. They are asking to get the DTA procurement or invoice endorsements from the SZ unit for the past period also, from the July 2017 onwards. Though there is no such requirement, but officers are insisting to get those certificates from the SEZ units. So coming to the merchant export, uh, uh, notification 40 by 2017 has given option to supply to the merchant exporter at the concessional rate, that is 0.1%. If you want to supply to the merchant exporter, you can supply at 0.1%. That is the benefit given by way of notification 40 by 2017. But this is subject to certain conditions. Uh, so what are the conditions we'll see? In case of if any of you are engaged into the merchant export, I mean, if you are supplying any goods at concessional rate to the merchant exporter, ensure all the conditions like in the shipping bill, actual supplier or manufacturer details has to be mentioned, and the shipment has to be done within the 3 months from the date of invoice, and um, we have to inform the jurisdictional officer that I'm making the supplies to the merchant exporter at the concessional rate. There are some other conditions which we need to comply in case of supply to the merchant exporter at the concessional rate. Otherwise, they will propose, they will demand to pay the full tax, denying the concessional rate of tax. So you have to ensure all these conditions are satisfied or not in case there are any supplies to the merchant exporter. Another reconciliations. Uh, yes. So reconciliation. With the introduction of GST, just a second. Yes. So with the introduction of GST, scope of reconciliation has expanded significantly. Earlier, there is only two-way reconciliation, just your books and your tax returns. That's it. But with the introduction of GST, there are lot many reconciliation you need to do. Uh, so with the introduction of GST, not only the two-way, not even the three-way reconciliation, you have to do the multi-dimensional reconciliation because your data has to be consistent with the multiple sources of the information, right? So now we obviously you have to do the reconciliation between your books and GST return, that is 1 3B, and along with that it is suggested to reconcile with the e-way bill also. Recently department has started issuing notices uh, stating that your turnover as per e-way bill is more than your turnover reported in year 1. So in order to avoid such notices, you prepare now itself the why there is an difference between your GST returns and the way bills, along with the similarly with the e-invoices also. And if you are done any export of goods with payment of the tax, okay, you know all that there are two types of refunds. export with payment of tax and export without payment of tax. Export with payment of tax is an automated refund route. So if you have done any export of goods with payment of the tax, it is suggested to reconcile your table 6A figures in the GSTR1 with the ISGATE report. So with the help of this reconciliation, you can identify the errors for not processing your refund. If, these are the errors which will cause your refund to get later, will not process later. So yes, if you there are some error if your refund will not get processed, the ISGATE will throw some errors. Might be the common errors might be mismatch in invoice number, or the incorrect port code has given, or the shipping bill number has missed, or wrong shipping bill number has given in your GSTR1, or any EGM had not generated for your shipping bill. You can get to know why your refund has not processed in the ISGATE. So this is the if you are doing any exports with payment of tax, we suggest you to do this reconciliation every month after filing your 3B. So you will get to know why your refund has not got processed. So reconcile the turnover interstate and interstate, and also tax type. So and also yeah, we suggest you to segregate your report based upon your rate wise, like 5%, 12%, 18%, and so on. And also the supply wise. As a whole, your turnover might matching with your GST returns, but there may be a chance that you have not classified your supplies correctly. So like let's say exemptor supply has classified as a zero rated supply, or zero rated supply has classified as a non-GST supply, there may be a chance. So for this reason, we suggest you to reconcile each supply wise. Like if there is a taxable supplies as per GST, as per your books of account, so you do the reconciliation with the taxable supplies in your uh, GST return. So like that, you do the reconciliation, and also the parties wise, B2B and B2C registration wise in case of multiple registrations. So if we have a multiple registration, obviously you will have only one financial statement for the whole India. You will have only one financial statement, consolidated financial statement. But for the purpose of filing the annual return under GST, you need to give the turnover of that respective state. So you be ready with all those reconciliation, all your state turnovers, each GST invoice turnover, and all those turnover clubbed together should match your consolidated financial statements. That reconciliation you um, keep it ready right now, because now GST department is directly proposing liability on the difference turnover between your what you have declared in your GSTR1 and your turnover as per CFS, consolidated financial statements. On the difference turnover, they are simply proposing GST liability without application of mine. So in order to avoid all those litigations, you be prepared with all those reconciliations. So this is how we suggest you to prepare the statement for reconciliation. Now, obviously, next to the while closing your books of accounts, anyway, we'll compare our books of accounts with the GST returns. Now, first we'll how to compare our books with the GST returns. Now we'll see. So on comparing your turnover as per books with your GSTR1, if you have identified any errors in the taxable turnover, then amend it on or before 30th November 2025. So if you have identified any error in exempted turnover, you don't have any option to correct in your GSTR1. Therefore, you correct it in the GSTR9 by giving the correct figure in the table 5 of your GSTR9. Similarly, comparing your books with the GST at 3B, if you identify any errors in taxable turnover by way of short tax paid, so paid before 30th November through your GST at 3B. If you have identified that you have paid the excess tax than what I have supposed to pay, then you can utilize that excess paid tax for the subsequent payments. Okay. So similarly, in case of if you have identified any errors in the exam turnover, let's say for the 10 lakh, I have put one more zero to that. It became 1 crore in my GST return. So I have to give the correct figure in my GST R9. So that will serve as an evidence at the later stage that I have keyed the wrong figure at the time of filing my GST 3B in case of future litigation uh, from the department. So coming to the most important thing, that TDS, this is the income tax reconciliation, income tax TDS reconciliation. This is the this is overlooked by many of the taxpayers. So with the help of this reconciliation, ensures income reported in your books of accounts and the 26, the income tax portal matches the GST returns and books. So it helps in identify if there are any missed invoices. It means you have supplied, you have given invoice to your customer and he had made the payment and directed TDS on our name, but we missed to report that invoice in our GST return. So it will help identify those cases. It will be very rare, but it will help us to identify such cases. And also, if there are any advances received by me, but I failed to pay the GST on that advance. So this, as an auditor, it will help me to identify those transactions on which I need to pay the GST. So similarly, um, how to do either it's a simple process. You take the 26As or AIs from the income tax portal and each party wise you do the reconciliation. If your supply as per your GST returns and your 26As is matched, okay, everything is correct. If there is any discrepancy, identify the reason for the discrepancy. There may be an timing difference. Thus, your customer might direct that TDS in the subsequent period or the previous period. Like that, there may be a chance. So you document all those reasons for not matching cases. Okay. Now coming to the sale of fixed assets. So if you are scrutinizing this asset part, sale of fixed asset part, so you take all the credits and remove all the depreciation entries. Obviously, depreciation will book in the credit side of the asset ledger. So check whether there are any disposal of assets or sale of assets, whether the GST on that has been paid or not, and ensure that whether GST has paid or not. In case of sale of motor vehicle, check whether tax has been correctly charged only on margin money. The margin money, uh, yes, notification number 8 bar 2018. Yes, that given concession in case of selling of motor vehicles, motor cars. That notification will be applicable only when you have not taken ITC, either in the GST regime or in the pre-GST regime, that is excise regime. So if you have bought an motor vehicle and you have not claim the input tax credit either in past regime or current regime. In that case, this notification 8 bar 2018 notification can be benefit of that notification can be able. What this notification is saying that if we have sold any motor vehicle, they have given the type of motor vehicles. So if your vehicle is covered in that, so if there is the profit, then only you have to pay the tax on that too on the profit only. If you are selling for the loss, that means your transaction value, sale value minus your WDV value as per income tax is negative, then you no need to pay any GST. So ensure whether these kind of beneficial notification has been adopted or not while valuing um, in valuation while disposing your vehicles. So ITC availment. So compliance with the section 18(6). This we have already discussed. Every every asset under GST will be considered uh, as having a life of 60 months. So in case of selling of any asset before 60 months, whether you have complied with the section 18(6) or not, be ensured that. So in my example, in the previous slides, 1,40,000 I have discussed. Yes, 1,40,000 I have discussed. If the case is vice versa, if my transaction value is 30,000, but my um, valuation as per 18(6) is 40,000. In that case, I need to pay GST on 40,000, not on 30,000. So ensure that you are correctly valuing it or not in case of sale of fixed assets. Now coming to the outward supply, some additional review points, credits in the expenditure side. So you have to give the utmost care to the credits and the expenditure side. You have to take all the expenditure ledgers and check whether there are any credits to those ledgers and see and test for whether GST liability will come or not. Scrutinize the credit figures in the expense side and test for whether they are subject to GST liability or not. And coming to the cross-sell transaction, if you have any related party transactions, then test whether cross-sell is being done or not, and ensure that. And coming to the indirect income or personal income scrutiny, this we have already discussed that, but the personal income we have not discussed. So as per in case of proprietorship, make sure commercial rental income which may not form part of your business profit or loss, GST discharge understand. Let's say I'm a proprietor, I'm having the commercial property on which I'm earning some rental income. So make sure that I'm paying, I have take registration. I am having GST registration. I'm doing some other business apart from the rental business. So make sure that I'm paying GST on my rental income also. So this is what I tried to get it here. Okay, GST is so concerned. Okay. So no tax or supply if when compliance is proper. The job work. So coming to job work, we have already discussed, but I want to highlight one thing here is if you have sent goods for job work, they have to be returned within 1 year. In case of inputs, in case of capital good, they have to return back to the principal within the 3 years. Otherwise, it will be treated as a deemed supply. In that case, check whether all the goods which have been sent to the job worker have been returned within the time limit prescribed under section 19. If not received back, that will be treated as a deemed supply and GST has to be discharged on that. And time of supply will be the date when you have sent to the job worker, that date will be taken. Okay. So if I am sent a goods 1 year before and time of supply, that I am supposed to pay the GST liability 1 year back, not now. So that is another implication will be there in case of non-returning of job goods from the job worker. And in that case, I need to pay the interest along with the GST liability. So e-way to be generated irrespective of the consignment value. As you all know that for e-way bill has to be generated only if the consignment value is less than 50,000. I mean more than 50,000. But in case of sending goods to the job worker, though the consignment value is less than 50,000, I need to raise an e-way bill for each and every movement of goods to the job worker. In the same way, from job worker to the principal also, uh, job e-way bill has to be raised. And coming to the export related compliance, ensure LUT is executed. This we have already discussed. Make sure in case of export of goods, goods move out of India within 90 days. Yes, obviously within 90 days, goods has to be moved out of India. For that means EGM has to be filed within 90 days from the date of invoice. That is, export general manifest has to be filed within the 90 days. And review whether export proceeds released or not. This, if export proceeds are not released, this is not only the violation of the GST Act, but also the violation of the FEMA provisions. So as per the FEMA, we need to uh, get the export realization within the 9 months. Otherwise, your RBI EDPMS will show the pending. With the help of that also, you can identify for which are all the invoices realization has not received. And goods sent on approval basis. So, if any goods sent on approval basis, they have, if the sale has not happened, they have to return back within the 6 months. So if they have not returned within the 6 months, that will be treated as a supply on the date when uh, they have supplied from the factory. So you have to ensure that whether there are any goods which have sent on approval basis, whether they have received back or not. In the date of sending, you have to take a note and check for the implication of the GST liability on those cases. Now coming to the e-commerce related reporting, sales made through e-commerce operator. So in case of any sale made through the e-commerce operator like Swiggy, Zomato, Book My Show, Make My Trip, they have to report in the appropriate column. Ensure they are reported in the appropriate column. In the GST R1, they have to report it in the table 14. So check whether they have reported correctly in the GST returns or not. In case of e-commerce operator, earlier this case through the e-commerce operator, now I am the if I am an e-commerce operator, then I have to report it in the table 3.1.1 of the 3B. So again here we ensure that segregation of taxes on the own supply versus taxes supply through them. So what are you have to segregate your turnover into two types. One is the supplies, your own supplies on which you are doing on your own. Another is supply through them. You are supplying another one goods through you. Again, this is the TDS credits. This is a GST TDS. So it is suggested to do the reconciliation between your 1, 3B and 7 is the TDS return. So coming to the TDS credits, the checkpoint is that it was it pertaining to the 24-25, let's say, and GST credit is also accepted in the same year. Invoice related to 24-25, and I am also accepting the TDS credit in the same period. So ensure that invoice is shown as sale in the GST R1. Ensure that. Otherwise, again, this is the counter check. Let's say the other part. If I have accepted the TDS credit in the current financial year, I mean 24-25, which is related to the 23-24, and ensure that I have shown that invoice in that year 23-24. So output, ensure that output taxes have been duly paid in 3B of 23-24. Obviously, if I report it in the GSTR1, I will pay it in the 3B. That the basic 1 versus 3B is the basic reconciliation. Not only we, even the portal will throw you an error DRC 01C if there is any difference between your 1 and 3B, DRC 01B and 1C. They will instantly issue write the notices in the portal. So by way you can get to know if there is any difference between your 1 and 3B. So this is how you can compare your TDS credits versus your GST of 1. Tax payable in 3B of 24. This is related to GST. I'm not going into this. Now coming to the so till here the outward revenue part is completed. If you have any questions, you can ask your questions. Yeah. Yeah. Someone has asked to please give 2 minutes gap. Okay. If meanwhile, if you have any questions, you can ask your questions by unmuting yourself or post your questions in the chat box. I will try to answer your questions. So now coming to the inward expense reconciliation and all that thing we will discuss now. Yes. So before that, first we'll discuss about the basics of the ITC. As we all know that I input tax credit is not a vested right. So many of this high courts has saying that your ITC is not a vested right. It's a conditional credit. It means uh, input tax credit can be availed only after satisfying, subject to satisfying some conditions. So section 16 provides eligibility and conditions. You can say the section 16 provides the preconditions to avail the ITC, and section 17 provides the post conditions. 16 about pre and 17 about the post conditions, and section 18 talks about the special cases, ITC treatment in case of special cases. As you all know, the basic conditions to avail the ITC, just to refresh your knowledge. Once again, I am discussing the basic conditions to avail the ITC. So in order to avail the ITC, you should possess the invoice, right? And I should receive the goods, and my supplier has to pay tax to the government, and I have to furnish my return, and the invoices should reflect in my GST to be. If and only if all these conditions are satisfied, so then only I can avail the ITC. That's the reason ITC is called as an vested right, is an vested right. I mean, not a vested right. It is subject to the satisfaction of these conditions. If only all these conditions are satisfied, then only I can take the ITC. So, yes. So, uh, if only if I'm satisfying all these conditions, then only I can take the input tax credit. While finalizing your books of accounts, you test each and every transaction whether all these conditions are satisfied or not. If you see the clause B, section 16 subsection to clause B, has received the goods or services above. At the end of the financial year, you may see the ledger called goods in transit. You have to be careful with regard to that. Ensure that you have not availed ITC on that, because goods are not yet received as on 31st March. That's the reason I have classified that as goods in transit. I can avail ITC only after receipt of the goods, not before the goods. Just by having the invoice, I cannot avail the ITC simply. Simply the vice versa. If I receive the goods and the invoice has not received, in that case also I cannot take the ITC. So ensure that you have received the goods, then only you can avail the ITC. So test all the transactions for all these conditions, whether all these conditions are satisfied or not. In many cases, I have seen that input tax credit is simply availing by just seeing your GST to be. Later, department can deny all that credit if you don't show the original invoice. So because the basic condition is that you should possess the tax invoice. just by availing ITC because it is reflecting in 2B, the same credit I'm availing in 3B is not that way. The process is not correct. So only if you have having the original tax invoice, then only you can avail the ITC. So ITC available on the basis of use. So if you see the section 17, the ITC which is directly attributable to my taxable supplies and zero as well as zero rated supplies. In that case, I can avail 100% ITC. So in case if my ITC which is directly attributable to non-GST supplies or exempt supplies or nil rated supplies, in that case, I'm not allowed to take ITC on that in that proportion. So in the simple, I will put in this way: if my ITC directly attributable to taxable supplies, I can avail 100% ITC. If my supplies directly attributable to the exempt supplies, in that case, I cannot take ITC. Even though I have satisfied all the conditions in the section 16, I cannot take the ITC as per section 17 because that's the reason I am classifying the section 17 as a post condition. Though you have fulfilled the precondition, you still continue to satisfy the post conditions also. Then only you can claim the ITC. So coming to this earlier direct attribution. Now there is a common ITC which is attributable to both taxable and exempted supplies. In that case, what I can do? In that case, I can take credit only to the turnover which is taxable. I mean taxable, which includes a zero rated supply. Let's say I'm having the ITC of 5 lakh. In that 5 lakh, 20,000 is related to other business. I mean, other than business. And 25,000 exclusively related to my exempt supplies. And 5,000 related to broker credit that we will discuss in the later slide. So out of my total 5 lakh, 50,000 is ineligible. Okay, 5,000 is because of 17.5, but 45,000 is because of using it for exempt supply and other than business. So this way, after reducing this 50,000, my credit will become 4,50,000. Even in this 4,50,000, only 3.5 lakh is directly attributable to my taxable supplies, including the zero rated supply. For time being, if I say the taxable supply, it includes zero rated supplies also, just to avoid the confusion to you. So out of the 5 lakh, 3.5 lakh is directly attributable to my taxable supplies. In this case, 3.5 lakhs, I can straight away take it. So out of the 5 lakh, I am reducing this 50,000, which is ineligible. Coming to the 4.5, in the 4.5, 3.5 lakh is 100% eligible. Now coming to the 1 lakh, this 1 lakh is commonly attributable to both the taxable and exempted services. Okay. So let's say audit fee. Audit fee, I am charging audit fee for the entity as a whole, not for the individual transaction, right? So in that case, I can take the ITC only in proportion to the taxable supply. Let's say out of that 1 lakh, 60% is my taxable turnover and 40% is my exempted turnover. I can take 60,000, that is 1 lakh into 60%. The 60,000 I can take, remaining the 40,000 I have to reverse in my 3B. So coming to the blocked credits, section 17.5 has provided the blocked credits. These are the various situations or scenarios in which though you have satisfied all the conditions, basic conditions, that is section 16 conditions, even then you cannot take the ITC on all these scenarios. We'll firstly quickly go through all these scenarios. So motor vehicles. So if we motor vehicles up to the capacity of 13, that means 12 plus 1, you cannot take the ITC. And the similar way, the food and beverages, ITC on food and beverages, you cannot avail even though you have availed those goods for the purpose of the businesses. Even the motor vehicle, even you bought the motor car for the purpose of the business, for the transportation of your employees, even then, in that case also, you cannot take the ITC. So goods lost, stolen, destroyed, written off, etc. In that case also, you cannot take the ITC. So while finalizing the books, you have to give the focus on these written off or destroyed things. These will be debited to the P&L account, right? So in that case, whether you check for whether ITC has been reversed on stock written off or stock destroyed or not. Ensure whether ITC has reversed on these situations or not. And coming to the life insurance, health policy, and club membership, uh, on all these and all these scenarios, ITC ineligible. And goods or services used for construction of immovable property, including the works contract service. If there is any ITC on such case, just you are not allowed to take the ITC. And NRTP, non-residential taxable person, he cannot take the ITC. And if there is any ITC which is related to the personal consumption, in that case also you cannot take the ITC. So, so in all these cases, though you have complied with the basic uh, eligibility condition, you cannot take the ITC in all these things. I'm not, yes. Common ITC reversal we have already discussed. So one more thing I want to highlight is for input and input services, rule 42 will come into the picture. That is the proportionate reversal. In proportion to the taxable you can take, and in proportion to exempt turnover you have to reverse the ITC. And coming to the capital goods, rule 43, we have to compute the reversal in accordance with the rule 43. As I said earlier, for every asset under GST, life of every asset will be considered as in 60 months. So let's say if I have purchased any asset which is attributable to both the tax, which can be used both for taxable and exempted services. In that case, that 60,000 has to be divided by 60 months and has to reverse in proportion to exempted supply in respect of each period, each month. So for the 60 months, I have to track it and reverse in proportion to the exempted supplies. So ensure in case of capital goods, which is using for both for taxable and exempted, this compliance is being done or not. In many cases, what they are doing is simply instead of tracking the ITC on fixed assets for the 60 months, at the time of taking itself, let's say always my taxable turnover would be around 60%, not less than 60. In that case, simply they are taking 60% credit on that. Let's say 60,000 is the credit on the 60%. 36,000 they are taking into the electronic rate ledger and reversing the remaining amount, the 40%. So for the purpose of the rule 42, exempt supply includes sale of land and building, transaction securities, outward supplies covered under RCM. That means I'm doing some doing some warehouse business. I'm engaged into the warehouse business, and in addition to that, I'm also engaged in transportation, which is under reverses. So that means recipient is required to pay the tax under reversal. So in that case, for the purpose of reversal under Rule 42, exempt supply includes my RCM supplies. In this case, tax will be paid by my recipient, not by me. Even then, though it is taxable for GST, but for me, it should be considered as an exempt turnover. Okay, and it excludes the exempt supply for the purpose of Rule 42 excludes interest and Schedule 3 transactions, but includes the para 5 of 80, that means custom bonded warehouse transactions the value of activities or transactions specified in paragraph 5 of the said schedule. So if you have made any sale, custom bonded sale, that shall not be part of your uh, shall part of your exempted supply. So again, now coming to the reconciliation part. Here, till now we have discussed the basics about the inward supply. Now we'll see the reconciliation part. So obviously, even in case of the inward also, you have to do the multi-dimensional reconciliation between your books, between your IT 7 unit 3B and your GSTR 2B. So now we'll see the various scenarios which has resulted after the reconciliation. Okay. So now we'll see after reconciliation, you find that ITC claimed in 3B is more than ITC in your 2B. So after reconciliation, you have identified this discrepancy. So how to deal with this? So you have claimed the exercise as per section 16. You can, as per section 16, you can avail ITC when if it is reflected in your 2B. So I have availed by mistake, I have availed more ITC based on my invoices. I have availed in my 3B. In that case, reverse that excess ITC claimed in 3B. Okay. And ineligible ITC claimed in GST at 3B. So again, if I have availed ITC on, let's say on motor car, I have availed ITC. In that case, it's an ineligible ITC. It's a blocked credit under section 17.5. In that case, you reverse the credit in the 3B, the table 4B1. As you all know that table 4B1 is a permanent reversal and table 4B2 is for the temporary reversal. Okay. If it is a permanent reversal, that means which you cannot claim in future, reclaimed in the future, all those transactions should be declared in the 4B1, and the ITC which are reversing for the timing temporarily, which you intend to claim in the future. If there is uncertainty about the ineligibility, in that case, the table 4B2 will be used. So, in case of ITC reversal as per Rule 37, it means scrutinize as per Rule 37. If you have not made the payment to your supplier within 180 days, then you need to reverse the input tax credit. So, ensure while closing the books of accounts, scrutinize the creditors list. If payment is outstanding for more than 180 days, ensure that credit on such parties is reversed. If you have made the proportionate payment, then you have to make a proportionate reversal. ITC claimed on the basis of GST at 2B, but not accounted in books of accounts. Just before we discuss this example, just by seeing from GST at 2B, the credit is auto-populating in 3B. Just I am submitting my 3B without verifying the input tax register. So this is not the correct procedure. You have to scrutinize each and every transaction and test for the eligibility. If it is eligible, if it pertains to you, then only it is advised to take the credit. So if ITC claim pertains, coming to the capital assets, ITC claim on capital assets. So make sure ITC claim on capital asset is in accordance with section 16 subsection 3. That means if you have availed ITC on, if you are claiming depreciation on the asset, I mean on the ITC part also, you are not allowed to take the ITC on the section 16 subsection 3. Let's say my asset value is 1 lakh is the taxable value and 18,000 is the GST. If I am claiming any depreciation on 18,000, I am not allowed to take the ITC on that asset. So in that case, what I have to do, if I claiming any depreciation on any of the capital asset, I mean ITC part, then I have to reverse that ITC. Coming to the Rule 37A applicability, as per Rule 37A, if your supplier has not filed the return up to 31st October, you have to reverse the ITC. Okay, let's say my supplier has issued invoice on 31st March. Till the 31st October, he has not filed his 3B. He has filed his 1. and that reflected in my 2B, and I have availed the credit, but he has failed to file the GST at 3B. In that case, I have to reverse the credit on or before 30th November as per the rule 37A. And later, if he file his 3B in the month of the December, and again, that time I can avail the ITC. Yes. And so you need to check this compliance also, whether rule 37A is being complied or not. Rule 37 is 180 days payment, and rule 37A is your supplier compliance. 37 is your compliance as a recipient. 37A is the supplier compliance. So payment to the vendors within 180 days. This is about the rule 37. So if you see this flow chart, the payment is made 180 days from the date of invoice, while the credit after payment towards the tax is made. So payment after 180 days from the date of invoice, reverse the credit, along with the interest you need to reverse. So no time limit for reevaluation of the credit. Let's say you have not paid within 180 days as on this date, 26 July 2025, but you have made the, so today you need to reverse. Today is the expiring date after 180 days. So let's say you have made the payment after 2 years. That time you can take the ITC after 2 years. There is no time limit for re-availment of ITC. At the time of initial availment only that 16 for time limit will prevail. But for re-availment, no such time limit prevails. So this is about the ECRS reconciliation, electronic credit reversal reclaim statement. So on reconciliation of the ECRS statement, if we have identified any ineligible ITC, reverse in the table 4B2. So just before we discuss that, table 4B2 is meant for the temporary reversal. Ineligible credit, in the future also you cannot take the ITC, but wrongly you have reported the ineligible ITC in the 4B2. Okay. So in that case, what I have to do? That in that case, reclaim the same by reporting in the table 41 and reverse it in the table 4B1 of GST 3B. So what I have to do is, so I have availed the ITC and reverse it in the 4B2. Okay. So now I want to rectify this mistake. What I have to do is re-eval the credit in the 4A5 and report the same in the table 41 and reverse the credit in the 4D, 4B1. That is a permanent reversal. This is what we have to do after identification this error. And coming to the next case, ITC reversed in table 4B2 and reclaimed. So I have reversed it temporarily, and afterwards, and after that, I have reclaimed it by reporting in 41, reclaimed in 4A5 by reporting it in the 41. And now I found that same is ineligible. Okay, already I have availed the credit, re-availed the credit. So what I have to do is reverse the same in the table 4B1, that is the permanent reversal, because already I have reclaimed the ITC, that is already created to my electronic credit ledger. So now I have to reverse it in the table 4B1. I no need to do any adjustments for the 4A5 or the 41. ITC reclaimed. I have made the temporary reversal in the table 4B2. I have made the reclaim, but while reclaiming, I have to report it in the table 41. But at the time of that reclaim, I forgot to report in the table 41. So now what I have to do is just report that reclaimed figure in the 41. That's the reason we suggest you to do the ECRS reconciliation also. Now coming to the IMS part, as you all know that now IMS has implemented in the GST portal. So if you find any invoices in the IMS as in pending, again you reconcile with the full year to be. If it get matches, then accept that. If it is not belongs to you, I mean that means your supplier has wrongly mentioned your GST and has uploaded. You can communicate with him, or you have an option to reject the same. So debit note pending in IMS. If dispute going on, keep it pending. Or if disputed, if you mark the invoice as an pending, it will be in the pending stage only as long as you take action on that invoice. So we suggest you to, after completion of the year, download your full year to be and your pending invoices and try to reconcile it. If any invoice is reconciled, I mean matched, then you change the status from pending to accepted. So as and when you mark that accepted, it will flow to your GST 2B, and from 2B it will be auto populated in 3B. You can take the ITC from there. So after reconciliation, if you find any ITC which was unavailed, you have a time limit of availing ITC up to the 30th November 2025. So if you have identified any unavailed ITC and identify owner before 30th November, that means that's October month return is the last, technically that's the last return to file owner before 30th March 2025. Now coming to the RCM part, I quickly run to this RCM part. So coming to the RCM. So in most of the cases, most of the taxpayers wish to pay the liability on the RCM. Even in the GST audit, they are proposing demands now on the RCM because now GST settle law. Everyone has got the idea on what ITC has to be taken, what ITC should not be taken. But coming to the RCM part, still there is a confusion in the trade. So for this reason, we suggest you to verify the vetting of expenses for RCM liability. If you find any transaction without GST, give more focus for that transaction and check whether any RCM applicability will be there on such transactions. And RCM paid reconciliation with RCM reflecting in your 2B. In your 2B, if your supplier mark any transaction as an RCM applicability, yes, that will be shown as an in your 2B as an RCMS. So your RCM liability, your paid liability should always be more than transaction reflecting in your 2B. Let's say in your 2B for the whole year, your RCM liability is showing as an 1 lakh. Your actual paid liability should always be more than or equivalent to the 1 lakh. Coming to the ITC eligibility on tax paid under RCM, all whatever you pay the tax under RCM is not eligible, right? There are some ineligibility also. Let's say you have paid the RCM on rent a cap. In that case, you cannot take the ITC on that RCM paid liability, right? So just check that whatever you paid the liability under RCM is not, you cannot simply claim the ITC on all that your RCM liability. Okay. Now coming to the rule 80/20, this is for the real estate sector. As per this rule, 80% of the purchases should be made from the registered dealer. If there is any shortfall, then they have to rectify that by paying it under RCM. Let's say he is having an let's say real estate builder has incurred 10 crore expenditure. In that he has procured 7 crore from the registered dealer, but he has fulfilled only 70%. But for remaining 7 crore, I mean 8 crore, 1 crore, 7 crore he procured from the registered dealer, and he has shortfall for 1 crore. So on that 1 crore, he has to pay under reversals for that 1 crore. Self-tax involved. So we have seen that many real estate, many builders in the real estate sector is not complying with this rule. This rule has to be complied each year separately, each project separately. If you're constructing, let's say, some 3 to 4 apartments, then for each of such building, he need to compute separately, and this is not for the as a whole, I mean, complete life cycle of the building. It should be seen individual for each year. Let's say if the building construction of the building takes 3 years, It cannot be clubbed together all those 2 3 years. Each year has to be seen separately, and this and subsequent year, if he is having only 1 crore expenditure, in that 1 crore, at least he has to procure, he has to incur 80 lakh from the registered dealer. Okay, self tax invoice at the end of each month. Um, self invoice has to be raised for all the uh, transactions which are subject to the reversal mechanism. Coming to the reversal, these are some of the checkpoints. This reconciliation we have already done. Your RCM liability should always be greater than equivalent to your GST to be. Just before we discussed that whatever the RCM liability is reflecting in your to be should always, your actual pay liability should always be more than that. Okay. Coming to the RCM ITC should be less than or equivalent to your RCM liability. So this also we discussed. So enter your RCM, what you have paid your liability, you cannot simply take the ITC. So that's the reason your RCM ITC should always be less than or equivalent to RCM liability. Let's say you have paid an 1 lakh as an RCM liability. Entire 1 lakh is not, you cannot take simply ITC under RCM. Yeah, there are some ineligibility. You just check for ineligibility also in that. So self invoice, we have to write within 30 days of receipts of supply of goods and services. So this is the main document when if we have complied with all the RCM provisions, but at the time of audit, if we have not shown or not produced the self invoice to the audit officer, then he may deny the entire credit what you have taken under RCM. So it is at the end of the financial year, it is suggested to ensure that you are having generated the self invoice for all the transactions which are covered under RCM. So these are the services on which RCM is attracting. The tiles which we have highlighted, all the common services which the 95% business will have these services what we have highlighted. So I'm quickly running this GTA services in case of any inward transportation and legal services. And coming to the director service, uh, CBIC has given us clarified that in case of director service, if the TDS director under section 194J, then only the RCM will get retract. If the TDS director under section 192, that is a whole-time director as a salary, in that case, RCM will not get retracted. And further, uh, and also given a clarification that only those services which are provided to the entity in the capacity of the director, only those services will cover under RCM. Okay, let's say there is a common that every director will give his own building on rent to the business. In that case, he is giving that building not in the director capacity. He is giving that building on rent as an individual capacity, personal capacity. In that case, it will not cover under RCM. Coming to the renting of immovable property, this is the new entry added to the 13/2017 notification. In case of immovable property is taken on rent by the registered person, then RCM has to be paid. So at the time of finalizing books, ensure that whether all that whether RCM provision has been complied or not, and liability has been paid under RCM. So these are the goods on which these are the services on what RCM will get attracted, and these are goods on which RCM has to be paid. So if you see the cashew nuts, Silkian, lottery tickets, used vehicles, PSLC, in all these cases, so in all these cases, RCM has to be paid on purchase of the goods. So these are the other checkpoints. Principal place of business, ensure that your principal place of business in the portal and your current business are the same or not. Ensure that all your go downs, offices, where the business is conducted within or added as an additional place of business in the GST portal. If there are any change in directors, partners, or authorized signatory, update your GST portal, and also the contact details and the branches in different state. New registration has to be obtained, and IST has now made mandatory in case if you have availed any common services on behalf of your branches, then you have to distribute the credit only through the IST, avail the services to IST and distribute the ITC from IST to your branches. So if you do the cross charge for those transactions, it is not the right way. Now they have made, because now the IST is mandatory. So now coming to the adjustment to the books of accounts. So as in when you raise the invoice for each of the invoice, output tax liability will get created, right? So at the end of the period, or at the end of the financial year, you transfer all the output tax liability to the electronic liability ledger. So if you see the GST portal, you will find that three types of ledgers: electronic credit ledger, that's the first one; electronic liability ledger; and electronic cash ledger. So it is suggested to create ledgers in your books of accounts in the same way: electronic liability ledger, electronic credit ledger, and electronic cash ledger. So at the end of each period, you transfer all the liability on the invoice, output tax liability, to your credit ledger. So after transferring this, if you still if you still find any liability in your output tax ledgers, then there is some discrepancy. That means you have not paid liability on that. So this entry you can post by taking the data from table 3 of your GST 3B. In similar way, on availing the ITC, your ITC ledger will get debited. So transfer all these ITC ledger to your electronic credit ledger. If there is any reversal or ineligible item, ineligible expenditure is there, I mean ineligible ITC is there, charge that ineligible ITC to the respective um, expenditure or the asset. Let's say I bought a car. On car, I cannot avail ITC. So that ITC should be capitalized to that car. In the similar way, if I have taken avail any service for that car, even on that service, I cannot take the ITC. So that ineligible ITC should part of that expense, the service income. When vehicle maintenance, you should charge it to the vehicle maintenance account. So this is for on payment of the tax. So if you deposit any cash in the GST portal, I mean in the cash ledger. So as and when you deposit, you have to debit these ledgers, electronic cash ledger. So this is the set of entry. After setting off, if you see the liability is getting debited and ITC is getting created, the balancing figure is getting knocked off from your electronic cash ledger. This is how these, so that if you maintain all these ledgers, your your ledgers in the portal and your book ledgers should get matched. So this is the gist of what we have discussed till now. The GST book ledger offset entries, uh, ledger parking. Yes, in many of the cases, as and when if you have claimed any refund, either export or service or inverted duty structure, if you have claimed any refund, ensure that you have transferred the input tax credit from the electronic credit ledger to the refund receivable. After receiving the refund, you debit the bank and create the refund receivable. Okay. Similarly, if there is any reversal, this we have discussed. Similarly, if the total refund has not been sanctioned, let's say 90% refund sanctioned and 10% refund got rejected, give the adjustments in the books. Because of the small things, your ITC as per your books and ITC as per your portal is not matching. So give the adjustment for this also. If there is any rejection, then you have to file the PMT03 in the portal. It will recreate to your electronic credit ledger. So as and when it recreate to your electronic credit ledger, even in your book, you uh, recredit it to the your electronic credit ledger and credit the refund receivable. This is how you post the books of entries in your books of accounts. Anyway, we'll share this PPT to you all. You can go through all these entries. These are basic entries. Um, oh, we have 430. Yes. These are all some other compliance to be done. LUT, this we have already discussed. Ensure that every year your LUT is getting renewed. If you have uh, if your turnover is more than 5 crore, ensure that all your outward supplies should e-invoice has been done or not. Ensure the e-invoice has been done or not. And taxpayers having turnover less than 5 crore can opt for QRMP scheme. Uh, ITC 04, this also we have discussed. For coming to the ITC 04, taxpayer having turnover less than 5 crores, up to 5 crores, they can file the ITC 04 annually. But whereas in other cases, they have to file it off yearly. And coming to the GTA, who intend to opt for the forward charge, they have to submit the declaration in an way on or before the beginning of the financial year. Anyway, now we are in the month of the July. If you want to opt for the forward charge as in GTA, we can do it. We can do it only for the next year, that is from the 26-27 onwards. So this is all about. If you have any questions, you can ask. So there are some questions in the chat box. Can I claim ITC which is eligible? There is one question from Manimaran Shanmugam, sir. So sir is asking that can I claim ITC which is eligible but not reversed under 4B2 and corresponding month? So yes, sir, if you have not availed ITC, you can uh, take the ITC in your you can directly add it in the 4A5. Only if you have reversed the credit in the 4B2, then you need to report that at the time of reevaluation, you have to report in the table 4A5 and report it in the 41.
Excuse me, sir.
Yes, sir.
Yeah, see, one of our supplier has given trade discount 10%. See, we have done it. Turnover that within 10 crores. Okay, supply purchase. So the he has given 10% discount, the annual discount. So the trade
Okay.
discount. Now,
Okay.
this one we should treat as income and we should charge GST or we have to reverse the input credit already available. Correct, na?
For trade discount, there is no need of a reversal of ITC, sir. It's trade discount mean is it subject to GST or not, sir? The credit note.
No, in the credit note is not mentioned anything. Yes, yes, he's
That's
telling
the
that.
commercial. That's the commercial credit note, sir. Just to set out balances in our books, he used to give. That is
No, no,
not
no, no,
subject.
not that one. See,
Yes, sir.
we have purchased around 10 crores. Okay.
Okay.
For that, yes, every year is giving a annual trade discount of 10%. That means what we are doing in the upcoming bills of outstanding bills, we are setting off that whatever 10% and 10 crores, we are paying balance.
Okay.
That at the time of purchase, we have already input credit. No. Now we are while making payment, we
Yes,
are
sir. In that
deducting.
case, you have to reverse the credit in that proportion.
That means and you have to see income. We should totally, we should show the trade is in the profit and loss account credit side, correct? Na? Because we cannot reverse the purchase because this purchase is purely raw material cost. What already is valued with that much as we have used in the consumption for production purposes. That this trade discount we cannot reduce from the raw material cost. That's different setup, correct? No?
Yes, sir. Yes.
Yeah, fair enough. Yeah, thank you. And
Yes.
similarly, see,
Yes,
there
sir.
are certain debit notes are raised by the customers. Okay. Now, what
Okay.
happened? We did not raise the credit note in the portal in order to uh, set off the reverse the our output liability. Now, he is also not uploaded debit note. In such a scenario, Who's responsible to raise the credit note in order to get the reversal benefit of output tax? We are
So,
the we are the
yes.
supplier supplying goods to customer. Customer rejected the material and send it to back. But he is just giving debit note along the delivery channel. But he will not upload his debit note in the portal. But whether you know the credit note upload at the portal lies on the we being the supplier or that customer should have raised debit note.
Sir, under GST, both the credit note or debit note can be raised only by the supplier, sir.
Supplier is it? Okay,
Supplier.
okay.
So we cannot do as
Okay.
a customer. We cannot do it.
Where the customer is, there is
Even
section
if it is a
34
credit note or debit note, only the supplier can do it.
supplier only. Fair enough, fair
Yes.
enough. Thank you, thank you.
Yes, sir. So now I'm handing over to Delhi Babu, sir. Meanwhile, I will
Okay,
give.
sorry to disturb you again. See,
Yes, sir.
coming back to that credit note, debit note, is there any circular or a rule section 34 you have to refer?
No, sir. At the time of framing GST law itself, if you see the GST one, it's clear that only the supplier can give the credit note or the debit note.
Where it says, sir, that any circular says, sir, circular section?
There is no such circular, sir. There's in the returns itself, it has been provided, sir.
Where, sir?
The
Just
return, I
one.
think it is in the advisory returns, GST returns advisory.
Okay.
Yeah.
Okay, fine enough. Yeah, thank you.
Yes, sir. What do you, sir?
Yeah, thank you. Thank you, Jagadeesh. Yeah, good evening all once again. The part of today's webinar, the second session, tech updates. In tech updates, I'm just sharing my screen. Are you able to see my screen?
Yes, sir.
Yeah, great. Yeah, in tech updates, there are 4 topics I'm going to cover. These are all totally, fully day-to-day useful modules and use cases. The topics are: number 1, Zoho Books to Excel integration using API. You can integrate your trial balance and create your financials, or you can integrate sales, purchase, other bank transactions, and you can monitor via Excel using API integration. That I'm going to show you how to integrate using APIs. The second thing, emails to Google Sheet using AppScript. Here, this is very much use case nowadays. All the conversations happening through emails, like orders or employee onboarding, client onboarding. There are many activities in business nature, different kind of business, different kind of email chains are there. Using that, you can track that emails and you can convert that required informations to your Google spreadsheet. Using that Google spreadsheet, you can create multiple MASs or alerts notifications. These are all very simple steps. Then okay, anyhow, I'll come to that later. Yeah, the another 4th subject, Google spreadsheet to Tally Prime integration using API. Here I'll show you how to integrate Google spreadsheet to Tally real time for sales integration, purchase integration, or if you create any watches in Tally, you can transfer that also to Google spreadsheet. That vice versa, I'm going to show you. The another one, Zoho Flow integration with Zoho Sign. This is very useful module. Nowadays, there are many tools, there are many activities, but if we say in market and businesses, they're using Word, Excel, and other documents for their contract signing or agreement signing or their NDA document signing. For that, using these simple steps, how we can automate after just onboarding employee or onboarding your customer or onboarding your order. There are many use cases. Using that use cases, you can directly send contract or document or NDA to your customer or your client, your employee to sign that one. I'll show you all the steps, how this will help for your day-to-day activities and businesses, how it will help. Yeah, okay. Instead of discussing Here we'll go with directly practical session. The first thing, Zoho Books to Excel API integration. So just downloading my shapes. The first topic is Zoho Books to Excel integration using API. Let me open Zoho Books. This is my Zoho Books account. Maybe if you know about Zoho Books, it is very much easy. Same like Tally, same like Alien Books, My Books, QuickBooks. These are all cloud-based applications. One of the best application, Zoho Books nowadays after Tally. Yes, see here you have multiple options like Tally, or if you are using any other applications. As you know, here I'm just going to show you on small transactions how we can sales. Here we can create sales. I just create sales entry. Just I show you the UI. If you are new for it, then you can easily understand. I'm just going to create one invoice. I'll tell you why I'm creating also. See, I just selected my customer. I'm not showing entire Zoho Books, how it will work, how to create customers, how to create to set up other configurations and create other transactions. I'm just showing that one single UI, how to build it from Zoho Books. Suppose someone is not having idea about Zoho Books, then at least they come to know how this will work. See here we can have 12,500 rupees GST consulting service. It's very simple and user-friendly application. See, I just selected my customer name and I selected my service and rate and amount. Here there are multiple options. I can save as draft, or I can save and print, save and share, and save and send later. I'm just using save and send later option. Okay, it's showing HSN is missing. Okay, let me update HSN. Some dummy number I'm updating. Don't question. I just created one tax invoice. Here I can just mark as a sent. After creating this tax invoice, see if I am fast, you just do let me know. So this is how I just created one sales invoice from Zoho Books. Here only they are giving one good option, record payment. So automatically it will take all the bill reference details and customer, all the required information. This is my amount, and also it is posting to cash, petty cash. I'm just recording payment. So this is how we can create one invoice and payment. Now we'll see in trial balance how just my agenda here, how we can integrate Zoho Books to Tally and real time. Here I just created number one tax invoice, and also I created receipt against to that. Number three, I'm just going to show you trial balance from Zoho Books. Finally, I'm planning to integrate. I'm integrating Zoho Books to Excel trial balance on real time using the APIs. Here in left side there are report section. Here you can go and search trial balance. There is search option also, you can go and search, otherwise you click on trial balance here. See, this is my trial balance from Zoho Books. Just one small question. to all the participants. How many of you know about Zoho books? Can you put it in chat? I'll pause for half minute. How many of you know Zoho books? No chat, no response from anyone. Nice. Aditya has said you know about it. Great. Thank you. Yeah, I just simply created maybe whatever applications you use like Zoho Books, Alien Books, My Bill Book. There are many refresh.in or QuickBooks or any other Oracle Fusion or cloud applications. This is also one of the cloud application. The May 99.9% same way the application agenda is to create transactions and to provide financial reports. Other than that, there will be some additional benefits application to applications, maybe some automations and special reports based on their nativity. Yeah, ultimately here, this is the trial balance. Now I'm going to sync this trial balance dynamically to Excel. First, I'll show you. Is it possible to, okay. Yeah. So this is the Excel template. I'll show you first how it will sync. Then I'll show you one by one how we can set up this one using API keys. See, this is my trial balance. Before that, yeah, there are some steps we provided. I'll explain you one by one. And also we'll have to provide some token system. Once you update these tokens, you can able to get your trial balance on real time. Just I'm going to refresh here. This is just I'm using Power Query and created this report. The 88,500 rupees my trial balance. Here we'll check. Yeah, 88,500 rupees. Same records is downloaded to Excel also. Now you can create various reports using your TB, or if you want to download some other cash flows, you can download using the same method. Or if you want to download other transactions like invoices, expenses, bills, whatever transactions you want to download or bank transaction, you can download using APS this way. Okay, again, I am going to create one more record to show dynamically how it is updating. Now, if you see 88,500 rupees is showing balance, we'll go and create one more entry. Okay, we'll create one bill. After creating, we'll try to sync in Excel. Whether it will sync or not, we'll see. Bill number 0007. Bill date 26. Here you can select your GL code, but I'm just taking cost of goods sold only. Just this for demo only, right? I'm just leaving that. 17,089 rupees. I'm just selecting. Sorry. See here also same thing. Save as open. The bill is created. Bill from GMM Power. The service is GST consulting service. 17,000 rupees. Inclusive tax 20,165 rupees. Okay, same thing will record payment. Okay, before record payment. Okay. Cancel this one. We'll go and check trial balance amount. We'll sync here. See 1,08,000 rupees. Now we'll go and create payment entry. Save as paid. This is very much easy. It is all integrated modules. You can easily bill wise you can create your payments and receipts, or you can take based on your UPI IDs also. There are many integrations. I don't want to go into details. So it's payment also is recorded. the label is showing paid. Now again we'll go on sync here. See, now it is showing 88,500 rupees. Clear? I mean, it's real time. It is integrated. Whenever you create transaction and refresh here, automatically it will refresh. Okay, until now, any doubts? Now I'm going to show you how to set up this one, how to create yourself if you want to create. We will share you this template also after the session, but I'm going to show you all the steps how we build this tool and how we can generate keys, all those things. This is a little bit techy area. Until now, any doubts, any clarifications? Zoho Books to Excel real-time integration is there. There I just created some entries and refreshed it in Excel. It's real-time. The data has fetched to Excel, pushing it to Excel. Good. Yeah, Zoho. Yeah, quickly I'll tell you about Zoho. Zoho has many applications, around 50 plus applications. I'll tell you the top 10 applications. Number one, Zoho Books. Number two, Zoho People, Zoho Recruit, Zoho CRM, Zoho Begin, Zoho Show, Zoho Sign, Zoho Flow. There are many applications, Zoho Contracts, Zoho Prep, Zoho Analytics. I'll tell you the comparison also, like Zoho Books. Zoho Books, if I want to compare with other application, existing QuickBooks are there. The same way, but Zoho Books has lot of integration modules into application. There are many features. You can create many workflows and automations and direct integrations with many applications. The second thing, Zoho CRM is very beautiful application like Salesforce. Then Zoho Payroll. There are many payroll applications, great tip. There are many. And also Zoho Begin. It is a small application of CRM only in Zoho. Then Zoho People is a people management application. Then Zoho Recruit, Zoho Sign, Zoho Contracts, Zoho Analytics. Analytics I can compare with Tableau or Power BI. But Tableau, Power BI is more very many more powerful applications. But here also there are many features and integrations. But there are some limitations in Zoho Analytics. Yeah, this is about just a little bit about Zoho. I don't want to go in details. Okay, now I'm going to show you how we can set up this integration, Zoho Books to Excel. See, if you have real-time integration of your trial balance from any cloud application or any application with Excel, if you are preparing some financials analytics in Excel or various other applications also in real time, it is very much easy. You can just refresh and check your key areas or reports or exceptional reports or management reports. Just click a button refresh, or you can set up that refresh also automatically every minute. There are some options in Excel also. Okay, now if I come to here, I'll show you. Zoho has given API document. If you have a little bit techie knowledge, if you go and check this document, how to get organization ID or multi data center. Zoho has in many places their data centers in USA, Europe, India, Australia, Japan, Canada, China, Saudi Arabia. In these many places, they have their data centers. Then API call limits, they have given the in free version, they are giving 1,000 APIs. There are plan wise, there are some API limitations. Finally, the important area auth generation. If you go and check here, maybe I'm not going to in details. I'm just tutorial I'm showing. Here they have given each stepwise what are how we can generate keys to integrate with any applications. I'm just showing through Excel, but if you are integrating with Power BI or your in-house applications or some any analytical BI tools, the same documents if you follow, you can easily integrate Zoho Books with your applications. These are all the steps they clearly mentioned. If you follow this one, you can easily extract that one. The same link only we given here for reference purpose. Maybe we will share you after this session. First step one, there is a option. If you go with this link, you can create keys of the client keys of the API integration. I'll show you one by one. Number one, we'll have to create client ID, client secret ID, and code. Three things. For that, the steps. Number one, we'll have to go to API console Zoho in, or they in registration new client. Here in the section also they given this option. If you click here, it will redirect to the same page only. Otherwise, you can copy and paste this URL also. See, same URL only. Oh, here it's already redirected, right? API. See here also API console.zoho.in. From here also you can create. Here they have given multiple options for integrations. Number one, client-based application. Number two, server-based. Number three, mobile-based. Number four, browser-based. Number five, self-client. Yeah. Here I already created self-client. Okay, I'll delete this one and create. Sorry. See, once we come to this page, as per my steps, first it will ask click on get started. Just click on get started. Once you go to get started, then the another step self client, because these are all for other web application integration purpose, mobile application integration purpose. This is you can create for yourself for in-house application integration purpose, or like Excel integration, Power BI integration purpose. And here I'm going with self client create. See, the steps also is given same way. Here you selected self, then are you sure enable the self client? Yes. See, once I click on it, my client ID has generated. Just copy this one and paste it here. I'm just removing that existing one. I'm pasting this new one. The second thing, client secret. Yeah. Then we'll go to, see here also I give an image. If you follow the steps, finally if you create it, it will give you client ID and secret ID. You can copy and paste it here. The finally another third step, generate code. This is important one. I'll show you how to create generate code also. Here they will ask scope. Scope means you want to download entire Zoho books. You want to allow for third-party application to access your entire Zoho books, or you want to allow only contacts, customers, or vendors. That way you can provide this scope. So in their document, they provide all the scopes. Like if you see here, if you want to download accounts, they have given multiple options, the access methods for third-party integration. Zoho Books data accounts that create. If you want to create, you will have to provide this one. Otherwise, update, you have to provide this one. Otherwise, you want to access all these things, then you have to provide Zoho Books dot accounts dot all. Same way, I given Zoho Books entire access for third-party integration. Here, the time duration. The code, once the code is generated, it will be valid up to 10 minutes. I'm just giving one small content, create. Here it's came the code. Sure, I'll show you here. See, the first one generate code. I given the scope, Zoho Books dot full, then duration 10 minutes. Then I created. Then finally, I got authentication code like this. I given this images also here for your reference purpose in future. See, I just copied it, and again I came to token. Here I pasted. Finally, after pasting here, the another step, fourth one, generating access and refresh token. You came here and I given here the table. If you select it and refresh, it will generate the new refresh token. Maybe I'm not going in details. Maybe if you refer the document, you can easily understand. I'm just showing in a high level only. Again, I'm telling you. See, a refresh token has came because this also is created using Power Query. I'll show you the Power Query module also. Pressing Alt F12, your Power Query module will open. Sorry. We will share you the script. Maybe you can use this one. Otherwise, you can use ChatGPT or Copilot. There are many AI tools. The same code only they will that AI tools will generate and give it to you. So I'm just using that API and keys. I'm generating access token. This is the code. Okay, just I'm not going in details. Yeah, this is the table. I just refresh and got that refresh token. And the same thing I copied to here because this refresh token is required only one time generation, only one time for this entire tool to access your books. From second time onwards, taking this refresh token, you can generate access token. Just click on this. Sorry, again I'm refreshing. See, now access token has generated. Access token means it will access the records. Refresh token means it will refresh every 60 minutes of that API key because there may be chance to leak your keys. That's why they will refresh. They will revoke that one. Again, we'll have to refresh that one. From here, this and this you'll have to follow regularly. Up to here is a one-time job. Following these steps, generating this code and generating refresh token up to here is a one-time job. From here, it's a recurring job. Clear? This is also is not required. From here, every time after generating this refresh token, every time whenever you get expired your key, you just click here and refresh it. It will get updated access token. Using this token, we can access all the records. See, now also I'm going to refresh this one. Taking that access token, it will get all the records. For this also, I'm just pressing again Alt F12. See, this is the trial balance. There are many steps I applied. Maybe if you know Power BI, Power Query, you can easily understand how. Otherwise, if you know M code also, it is very much easy. You can write or you can understand. Nowadays, you don't need to remember any codes or formulas. ChatGPT or Copilot, there are many AI chats. You can use that one. You can get these are all the codes. Just you'll have to apply your mind. What is your exact requirement? See, this is how I'm just using refresh token and see, sorry. Here I'm using refresh token and I'm extracting data. There are very simple steps. Using the steps, I'm real time fetching data to Excel. Okay. Integrating Zoho books and trial balance. Just a few steps. If you follow their documents or my these steps also, you can easily extract a Zoho books data to Excel. Yeah, until now any doubts? This is done. Now I'm moving to next topic, emails extracting to Google spreadsheets. Yeah, until now any doubts? I'm just pausing for a minute. If you have any doubts, clarifications on this Zoho books integration, I'll clarify you. No chat, no messages. No doubts also. Okay, let's move to next subject, next topic. Okay, our next topic is emails to Google Spreadsheet using Google Apps Script. It's already 5 o'clock. Okay. I'll show you how it will work. After that, I'll show you how I build it, and I'll show you step by step the steps to create this template and create these automations. See, there are many business they are following and they are tracking their orders or other business processes manually. Most of the time we are observing, and also uh, there are many steps they are following. They are maintaining many registers, manual registers also. Instead of that, nowadays, if you see all cloud applications, most including Tally also have a WhatsApp integration, email integration. If you enable that one, you will get invoicing details, payment details, everything through email. Using that information, automatically you can convert that information to Google Spreadsheet, and you can use that information for various MS purpose and various automation purpose. It is very much easy. I'll give you here one use case. This is one important export. I just taken on use case. It's an important export activity of this company. I'm just telling one X company. Here, they will get one order from their client. Number two, based on that order, they will raise purchase orders to their manufacturer. Manufacturer will take that order with that all the details. Then they will confirm with that delivery date. Then once that is ready, they will confirm this is ready. Again, they will confirm via email. They transfer that material to shipping ad. Then the assigning to that vessel, then vessel movement, then delivery, everything they're communicating through emails. Finally, using that email information, people are not only one place, many places we are observing, as you know. This is one use case I'm telling you. They are entering in Excel or registers all the information and trackings to track when that material will come or is there any delay, all those things. Instead of that, if you just create one small automation, these are all free. Whatever I'm showing, these are all free only. These are the Zoho books to Excel integration also is free. Just if you know the steps, you can easily integrate that. You can get that reports. Not only Excel, you can integrate your Zoho books data to Google Spreadsheet. Here also you can create various MIS reports, and you can share these reports with your management or respective sales department, purchase department, or various department or respective persons. It is easy. Real time it will sync to Google Spreadsheet and you can share it. There are many use cases you can save cost also, because if you want to buy multiple licenses, maybe I'm telling some tricks. If the companies know about it, they will block it. Maybe they are also aware of it. But anyhow, I'm telling you, if you integrate this with your sheets, you can give to your various people. They can access and they can view that respective MIS report. Suppose if you want to provide that similar access, or if you want to provide the create and provide that kind of reports, you will have to pay for analytics to create that exceptional reports. Number one, that is one licensing cost. Number two, in Zoho Books or Zoho Analytics, whatever applications, if you want to buy licenses, again it's too costly. Either if it is 1,000 rupees, also is unnecessary waste of investment. If you know this basic integration, you can just create this one and flow sync it with that data with spreadsheet, that relevant information. You don't need to pass enter information, that's specific information, and provide access from here. Here also you can create various security controls. I'll tell you later also, maybe if I have time. Just completely you can automate and you can save cost and you can get that real-time reports on real time. This is how this automation will come. Number one, the Zoho books to Zoho Excel integration, whatever integration you do using the API integration, you can save more cost and real-time reports. Number two, this one also. Using this Google spreadsheet and app script, you can extract various information. I'm telling just only email body of the information. I'll show you how it will help. Second thing, you can read your PDFs, JPGs using some extensions, or if that is, they have limitations. If companies having larger transaction, if you invest small amount, there are many AI tools, Japper, Make.com, N8N, Zoho, Power Automate, Automate AI. There are many applications. If you use that one without manual intervention, it will do complete automations. Once you received your tax invoice via email from your vendor, automatically it will identify what is the invoice number, date, item, all the information. It will convert it to spreadsheet. Or if you have a cloud application like Zoho Books, it will identify all the information. It will segregate all the information. It will create as a bill in your Zoho Books, and also it will send a notification to WhatsApp also, or Telegram, or Teams. There are this kind of features, but this is whatever I'm showing in Google Spreadsheet is completely free. Just if you apply 2 or 3 steps, you can easily extract this one. Yeah, anyhow, I don't want to take more time of you. I'll show you practically. Here, if you see, there are multiple columns which I created. Before that, I'll show you one small information. See, I just create one sample data of mails 1, mail 2, mail 3. If I send mails to my respective mail ID, it will read this all the information and it will update it to the respective columns. See, this is my subject, this is my body. If I send this information, it will identify and it will convert to Google Spreadsheet. Just I'm copying, and you don't need to put it in the same format also, whatever format. Or if you type in like paragraph also, it will recognize where is your order number, where is your amount, what is your client name, or your order reference number, or terms of conditions. If there isn't 10 paragraphs in body of the mail, there no need to be in a table format and PDFs also. It will identify. There are many algorithms. We can use that one. We can easily read that information, convert it to spreadsheets. The same thing, suppose in our next subject, tally integration. Suppose if you are receiving this kind of information or billing information by email, you can convert to Google Spreadsheet and you can integrate with the tally. You don't need to create manually. Automatically, every 5 minutes, it will check whether if there is any new record in Google Spreadsheet. If it is a record, it will read and create as the record in tally also. Completely end-to-end automation. You can save your data entry time also. Maybe weekly once you can ask your team to cross check all the invoices with your accounting. Maybe 99.19% it will work if your setup is proper. If there is any errors during that verification, they can identify, they can fix it. You can save a lot of time. Or you don't need to depend on your team also. In real-time reports, you can see in your MAS reports. Okay, anyhow, I'm just showing you how it will work. Then I'll show you one by one, step by step. There is another mail ID. See, this is the mail ID is VNV demo. Here I did set up for this one. There is one more mail ID, is my personal mail ID, Delhi Babu. From here, I'm going to send VNV demo. This is my subject. This is my body of the matter. This is some sample only which I created for demo purpose. See, this is my subject. This is my body of the mail. Here there are many information. If you see here, my order reference number is there. My order number is there. Here my customer number, again order number, product description, amount, and payment terms, port of delivery, port of dispatch, terms and delivery. There are many informations. Okay, now I'm going to send this to that mail ID. I send it. We'll see in this inbox. Every 1 minute, the Google Sheet will check whether any new mail ID has came. See, here it is came. Here also it came. See, I'll show you from here. Number 11. Here also you can see number 11. Number 11 has came. Here also there is a separate column for this order number. See. If you see in email, here it is showing as a very simple text format, but it is recognized and converted each and every information to each column wise. I'll show you here one by one quickly for your better understanding. Subject, it's copied and pasted in column A. Then if you see in customer, these are timestamp and status. The status also is taken from the mail subject. Then vessel, these are all information is not there. IMO number, departure, sealing, probability, transport company is not there. Then customer name is there in the body of the mail, seal customer. It's recognized and copied and pasted into here. Then order number. See, same way, if you come to here, whatever information is there, it is copied and pasted into the respective columns. See, if there is no data to this respective column, it's left as a blank. Hope this is clear. Now we'll send a few more mails. How it will update here? Okay, I'll show you. Then I'll explain you how it will. One small technique I applied here. The subject. There are some additional fields here comparatively to first mail. This is my body of the mail. I'm sending it. We'll see. And also we'll draft one more mail, the third and fourth mail also. This is scheduled. The before one is evaluated. Okay, fine. Again, I will send a fourth mail also. See, each mail having different formats in body also, but it will recognize using that keywords. It will it will check in the entire body and it will copy. See here in body of the mail, if you see here in the first line there are vessel name, IMO number, departure date. In the same line it is there, but it will recognize and it will copy to that respective columns. It's completely free of cost. Just you'll have to apply small 1 or 2 steps to create this automation. So I sent it to okay, this mail. It's received here. We'll see whether it is received or not. To here also. Yeah, it is received. Here status also we can see scheduled, evaluated. Everything has received. Yeah. The second sheet why I created, if there is any multiple mails regarding that order, it will capture in sheet 1. But if there is any update in that order, that will update in the respective columns in sheet 2. That means in sheet 2 it will maintain as a unique records. See. This is how it will work. For this one, I'll show you quickly. See, all the columns are splitted and copied into the respective columns. Clear? Any doubts until here? The another important thing to do this automation, there is an option in extensions app script. Okay, there is another 15 minutes only. Sorry, I'm maybe taking a bit slow the session. Okay. See here in extension, they provided this inbuilt function in like in Excel, there is a macro VBA. Same way here also they given macros and app script by inbuilt. Google is providing that one. Using that one, you can do these automations. So this is the script, very simple. You don't need to depend on anyone. Just if you have some idea, you just create these are all the columns you want to extract from the body of the mail. These are the keywords. You just mention in Notepad and put it in your chat GPT. Ask that to create one Google app script to extract your email and put it into this sheet. Then come to here, that will give you the script and paste it here. Once you 99% will give you proper only. If there is any changes or as you expect is not came, you just review it. You can easily understand the field names. There may be sometimes field name mismatches. Due to that one, that will give you some error. If you have little bit knowledge of modification, you can 100% get these results. Then once you copy this code, or if you create or type this code, there is an option deployment. You go and create new deployment. I'm just going and showing through manage section. No, here it's not required. Just you copy and save it, this script. You copy and save it, automatically it will recognize. The second thing here, triggers are there. Once you copy, you have to configure in triggers to check your inbox. See, add trigger, there is existing one. There is very simple steps. It is showing automatically that your function name, and here you can create the notification. Sorry, here the header from spreadsheet you can create it. Then notify. Just if you set up this one, automatically it will identify and it will trigger to your worksheet. Yeah, definitely, sir. We will share you the webinar video and we will post in our website and YouTube channel. If you follow that one, maybe you will get that notification. You can able to see entire video. Yeah, this is how there is very simple steps. Again, I'm showing you from extensions, app script. If you copy paste here your app script, there are multiple options. Your ChatGPT only will guide you the steps how to copy and how to paste and how to configure that one. You can easily get this results. See, okay. Until now, any doubts? Not only this one. Suppose if you have some complicated activities, it is if there is any limitation app script, 99.9% it will support for all the transactions. Maybe sometimes performance will come, performance issue will come. For that, there are many other alternative tools like Zapier, N8N, Make.com, which I told you, Power Automate. These are applications you use it, create some expressions. Otherwise, in Zapier, it's very beautiful application that will recognize all the information, that will show you all the tags. You can drag and drop, it will integrate and it will do the same activities. Okay. Yes, it's a very good question. Whenever you create app script, you will have to allow authenticate using the Gmail. Then only it will allow to access. It will function. It will run the two functions. I'll show in next one. Yeah, how that will work. The another now today's session, the another subject, Google Sheet to Tally integration using APIs. We have less time. Anyhow, we'll extend another 10-15 minutes today's session. See, now I'm going to open my Tally. From here, you can access spreadsheets from your Gmail also. Yes, you can. For MSX also is possible. Maybe using VBA you can do it. Otherwise, using M code also you can read the data. There are many options. Using a VBA and a Power Query is very much easy. Same like in Google Sheets, they provided macros and G-script. In Excel, they provided Power Query or VBA. You can use that one. You can integrate. You can read the data. There will be the same steps only. You have to follow the steps. So now the third topic of today's session is integrating Google spreadsheet data to Tally. This is very much useful for accountants and small businesses. If you use this one, your time will save at least 80 to 90% if you are continuously doing data entry on day-to-day basis. And bonus, I'm showing you from Tally to Google Sheet integration also. Okay, my Tally is open. I'm just opening. I'm deleting that existing record. There is no records in Tally. See, here is a very simple format. If you're accountant or business owners, you can easily understand. These two are system generated columns. The first two. Sorry. Give me a second. I'm just coming to purchase. Here, this is purchase. Here, you can create a purchase template, sales template, journals, whatever transaction you want to feed it in Google spreadsheet. You can create and share it with your team. Here I'm just creating one standard sample template with invoice date, invoice number, party name, bill amount, expense, ledger name, GST percentage, taxable amount, IGST, CGST, SGST, and round off and TDSs. And finally, these three are system updated fields. Okay, this is very simple and standard method only. Maybe when any invoice, there will be minimum information. Invoice date, invoice number, party name, bill amount, expense type, and taxable amount, CGST, SGST, IGST, or TDS, and if there is any round off and discounts and freights. Okay, same way here I'm just feeded some small information with one party name and amounts. If you see here, I'm just see the control is if there is no master ID, if it is downloaded and created in Tally, again the Tally will push Tally master ID to Google spreadsheet. That means again it won't download to Tally. That means we can prevent duplicates creation. Yeah, and also it will update time also when it is created in Tally. Okay, using this information, I'm just enabled 2 or 3 records. 3 records. I will enable one more record also. 4 records. These 4 records now ready to download. Now I'm coming and now I'm moving to Tally. See, for this one, number one, Google spreadsheet, we can create this kind of template and we can feed it. Number two, the integration. How we can do integration, that I will come to in next after showing this one, how it will work. The same methods I'll show you. Yeah, first there is a information, and also I created one supporting add-on for Tally to download that information. So pressing this integration Google spreadsheet, there I given again 2 options, sales and purchase. Now I'm just clicking on purchase. If you see in the right side bottom, it is showing downloading records. Give me a sec. I'll show you the steps also after creating some entries. Yeah, it is downloaded and again it is sending status to Google spreadsheet. I'll come to here. We'll monitor here. See, this two is updated 26. and the two also will come. See, it's updated dynamically. That means we can easily identify this is the master ID in Tally because it's already created in Tally. We can easily understand that one. Display daybook. You come to here, there are transactions. I'll show you from here. 6006. Here also 6006. Total 11,750 rupees. 11,750 rupees. Give me a second, please. Sorry for pause. Yeah. So it's completely transferred this information and created as purchase voucher. How we will create manually, the same way it is integrated. This way, if you have multiple records or much of records, suppose 1,000, 2,000 records also, you can directly integrate. If you have multiple branches, they entered branches, we can integrate the two books. Same way, I'll show you. Yeah, understood. To show multiple entries, I just added a here. We'll put it in 0 here also. Thanks for reminding. Okay. Let's close this. We'll sync again. Again, I'm removing that master IDs. 11,800. Maybe I'm just entering 11,800 means everyone can understand easily. That's why I'm just adding that one. Instead of pressing this button also, you can set intervals. In demo version, this is not there, but we can enable that one. If you set every 5 minutes, 10 minutes, it will check if there is an increment data, it will download from backend and it will create as a entries in Tally. See, it's created now. Yeah, thanks. Someone has identified the wrong entry. By mistakenly, we entered in IGST. That's why somebody is identified. Thank you so much. Yeah. Now I'll show you sales also how that will work. See here also we have a GST amount. To check multiple line items, we entered that way. Maybe that's the reason. There are round offs, all those things we'll see. Now we'll try to shrink this record, the sales. Same way only. Come to here and click on shrink sales. It's downloaded and created, and also it is sending back the status to Google spreadsheet. We'll come and observe here whether it is updating or not. It's updated. These are all the master IDs. This is the time. It's created time in tally. See, here two entries has came. The first entry, sale of sand, CGST, LGST with all the required information. Here with the discount and round-off scheme. Okay, this is how we can sync. Suppose here reverse. If you want to transfer your tally data to Google Sheet for MIS report purpose, each entry wise, that is also possible. Quickly I'll show you that also how that will work. If you save entry, based on that accept, we can transfer the data. Now it is transferring the data to Google spreadsheet. Maximum it will take 2 to 3 seconds. They will come to here. See, scheme. Voucher ID 9. Voucher ID 9. Okay, if required, we'll save this one. We'll resave it. We'll put if required. Test 6072025 to identify 1743. Whether the same record is posting or not. See in purchase, we'll check in narration. See the same only came to Google spreadsheet. Using this real-time transactions in Google spreadsheet, you can create various reports. From here also there are many tools. You can create various presentation reports also. You can publish that one. Maybe the respective persons can access and see on real time. See, after entering in tally, in real time it is coming and updating Google spreadsheet also. It's like one mirror of your database in Google spreadsheets you are maintaining. Using this information, you can do whatever you want. Yeah, definitely. That this is just demo. The invoice number will come from here, voucher number. If you add prefix and proper numbering setup in your system, that will come automatically. Yeah. Until now, any doubts, we just try to integrate Zoho books to Excel. Then second thing, emails extracting to Google spreadsheet. Number 3, Excel, Google spreadsheet to tally for purchase and sales, and also tally to Google spreadsheet for all transaction transferring. These 3 areas, if you have any doubts and clarification, you just let me know. Maybe it's almost all as per our webinar time is over. Within 5 minutes, I'll finish the document also. We'll wind off today's session. I'll pause for a minute. If you have any doubts for this integration, you just let me know. Quickly, I'll show you, and also we will share you all the scripts, how I developed this one. Also, I'll show you quickly. See, in Tally also quickly, I'll show you to enable this tool. This is one plugin we created for integration purpose. Through help, you can able to load these TDLs using manage local TD. You can load TDLs. After loading, there are configurations. You need to enable this one. Once you enable, you will have to get deployment ID of all the transitions for integration purpose. Maybe here we may get one question again where we can get the deployment ID. I'll show you now. From Google spreadsheet, we can get that one. See, from one transaction, I'll show you any one. You can take any of the record. Sales, here extension again app script. From app script, yeah, if you need any further support on this, you just send a mail to venu@venway.ca. They will communicate you in details. So, Siddharaj, hope this is clear, right? There are many partners in market. Thousands of more partners are there. If you have any dedicated partner for your company, you can approach with them. They will design and give it to you. Otherwise, anyhow, we already developed it. If you connect with Venu@venu.ca, they will help you on it. Here, see the step number 1, app script. If you click on it, this will come. You just need to create the script. Maybe same way if you use ChatGPT, you will get it. Otherwise, as some Siddharaj is asking, you can connect with Venugopal. They will help you with this all the scripts. Then once copy paste this code, there is an option new deployment. I'll show you now. Manage deployment. Okay, I don't want to go manage deployment. I'll show you new deployment. If you create new deployment, it will ask your project name, suppose test. Here you need to select me only, then anyone. Then if you press deployment, it will create and give you deployment ID. And just to stop there, and I'll show you through manage. Here like this, it will show you deployment ID. You just need to copy this one and paste it here. This is how we can integrate Google Sheet and Tally. Clear? Any doubts? Google Spreadsheet and Tally integrations for Tally integrations. Okay, quickly I'll show you how to integrate contracts. This is very, very, very useful for all the companies. If you are creating any documents, for example, we are doing any development activities in your company, multiple times you will generate work orders or contracts, agreements, or if you are having multiple customers onboarding, that time we may create multiple agreements, NDA documents, all those things. For that, with simple information, if you provide of minimal information, the entire process will take care by that automation application. That means I'll tell you, if you give that your customer information, the base information, the contact person email ID, the client name. These three fields if you provide as an input, automatically it will send your NDA document after submitting that information of three fields to your customer. Along with your customer, it will put a CC to you also. Once your customer is signed through via online, I'll show you here. Then it will ask you to also sign. Once you both signed, or if there is a multiple persons has to sign, if all persons are signed, the final copy will, certified copy will again send to all the respective persons. Suppose if anybody is not signing, there we can put some delay functions, maybe for 24 hours, 48 hours. Again, it will send one more notification to remind them. There are many steps. Using this step, you can easily track and create one library, and without any reminders and follow-ups, you can get signed your contracts by your clients and employees, whatever your process you are following. Quickly I'll show you. Hope up to now you are clear. Hope until now whatever we covered is useful for all the participants. Yeah, then quickly I will go to Zoho Flow. Can you put it in chat? How many of you know Zoho Flow or heard about it? Zoho Flow, Zoho Sign. Because of time limitation, I'm just skipping in detail explanation. If you need any further information, you can mail us, we will help you. So I can show you Zoho Forms. For this one, you can just take an example or use case of, for example, if you are having multiple customers onboarding, you can use it. Or if you are having employees onboarding, if you are relating to HR related department or some outsourcing, resource outsourcing company or various businesses. Just feeding that minimal information, you can publish all the documents via Zoho Sign using Flow. You can get the documents. See, I'll show you here how this will work. I'm using number one Zoho Flow for integration purpose. Number two, for contract signing purpose, I'm using Zoho Sign. Number three, that input form I'm using, like we can use Google Forms, Office Forms, or in-house we can develop one form, or you can use various application, in-house application, Zoho People, Zoho Recruit. There are many applications, and not only one thing. You can use any application to feed that information. The minimal information. Here I'm just using for demo purpose Zoho Forms. It is also like Office Forms, Google Forms only. Give me a second. Yeah, see. Here I just capturing few information of my client name, Kiran Kumar. Oh, sorry, client Kiran Kumar. First name, last name. Yeah, we'll add as like M. Email ID. This is very much important. Just adding deliver.in as my customer email ID, customer address, Bangalore, 81. Just adding some sample data. City, Bangalore, state, Karnataka, postal code. India, phone number, something I'm just selecting. These are all optional fields only. We can skip it. The important information, this one only I'll tell you why that is important. See, after submitting this form, there I already created one flow. It's triggered. See, 5:46 now. I'm sorry, I'm taking more time after the webinar timing also. Maximum I'll take 5 minutes only. We'll wind up. Yeah, it's triggered. And also Zoho also will see in Zoho. There is a document is received to Zoho. Because of less time, I'm not able to show all the features in Zoho Sign. It's very beautiful and user-friendly application with unskilled persons also can able to work on Zoho Sign. Quickly, I'll show you how to download, upload yourself, or if you want to manually generate and send documents through Zoho Sign. Okay, anyhow, I just submitted this one using Flow. It's triggered to Zoho Sign this document. First, it's sent to deliverable, and then once deliverable signed, then it will send to VN demo. Okay, we'll come to deliverable. Okay, just going and logging. Very much interesting. It is asking my mobile authentication. Oh, now receive. Give me a second. Yes, it's received. I read through my mobile. That's why it's not showing in Max. Okay. Anyhow, this is how the Zoho Sign will send a document. Proceed document. See here there are some options. Agree and continue. Then it will ask party name. I'm adding some dummy. something you have to add on the world. You will get it the same only. The second one, it's automatically redirected. See here, these are all government certified applications only. We can select and sign it. It is designation. Something else. Okay. Then automatically it is highlighted. Yeah. See, from Delhi Babu, it's sign done. Now it will receive to demo. See, now it is received. This one, right? Okay. Start signing. Proceed. The second party now of our company. You can sign it. Just selected date, and it is asking to finish. Done. We can download, and also it will send a final certified document also to all the persons. See, from here also we can download or we can print it. So there is an NDA document. The client has added their details, and also he has signed using Zoho sign module. See, both the parties' signatures are there. This is Venu demo. This is party, and also here their names also is coming. Based on requirements, you can set this one automatically. It will trigger and ask the signatures. If they fill all the fields only, then it will finish. Based on that, you can get in real time documents, and also it will Zoho Sign will maintain all the records as a library. Maybe after 5 years, also you can download from here. The certificate documents is completed. From here also you can download it. See, for this one quickly I'll show you this is how it will work, but quickly I'll show you how this can be set up in a minute. Then we'll sign off today's session. See, this is a okay. What is this? Here you can go and create forms if you are using Zoho Forms test. It is like Google Form and Office Form. There are multiple options in website library. You can drag and drop it and you can use this one. This is number one. Number two, using that one is very simple. See here, you go and check Zoho Forms. Sorry, Zoho Forms. Then you can use Zoho Form. No, this is sorry. Okay, I already used it here. That's why it is not showing in list. Yeah, anyhow, that's okay. If you search here, it will come. You can drag and drop here. Once you drag here, it will ask some minimal information of that form details. You will have to select that form. If you see here in my account, there are 2 or 3 forms. It is showing that one. But here we need to select this one. And after submitting that one, it will take that information. Then using that same, okay, sorry. Here also again you can For next step, you can go and search bar Zoho sign. Yeah, sign has came. Using sign, there are multiple options. You can fetch the document, you can send the document using this send document option. Taking this Zoho form information, you can map that fields here. See here, contact person details. Then the dynamically my customer details, the client authorization contact details. For this one, you have to create one template in Zoho, and the same template can be taken from here. Yeah, you just drag and drop this form information to these fields and submit it. Automatically, it will send a document to your sign, and it will take entire workflow steps. Yeah, quickly I'll show you how to create template also. See here, you can go and create your template, upload your PDF document, that existing PDF document. Here I'm having one document here. It will upload. After uploading the manually also, you can sign from here. You can upload and sign it here. See, there are some features. So you have to configure here. For example, the first, if you want to take sign from your customer, you'll have to provide customer here. Then the same field only will display in that integration area. Or if you want to add multiple persons, you can add customer. Then agent. If you want to take agent or witness, you can add the same fields will come into your flow. They're taking that form information, and you can fill this information dynamically. It will send to Zoho sign. This is how you can create and store one template. Using this template, you can integrate it. Yeah, this is how this Zoho sign. In Zoho sign, there are two options: send for signatures, like which I shown you now. The same way, here you can upload document, and you can create a sequence. You can send multiple persons. You can add multiple recipients and send within the order. Suppose first person is approved, then it will send for second. Otherwise, if you uncheck it, it will send the document to all the persons. It will take parallelly from all the persons the signature. This is first option. This is self signature. You can upload yourself, and you can sign the document. You can send through mail, or you can send from here also. There are multiple options. This is the main features. Okay, hope this session will useful for you all. You just try to practice. We will share you this recording. Maybe you try to practice. If you have any doubts, clarifications, and mail us, we will clarify you. Yeah, any doubts, any questions until now? The tech session is over. We covered Zoho Books integration with Excel. We covered email extraction to Google Sheet. That is also we covered. The third one, Google Sheet to Tally, Tally to Google Sheet. That is also completed. Then contracts agreement using Zoho Flow automations. That is also is completed. Yeah, here Siddharaj is asking what is the cost for Zoho Flow and Zoho Sign integration, or Zoho Flow and Zoho Sign. There are some free editions up to some level. They will give you some credits. You can use it. If you want to use more credits, you just check their subscription details. You can buy it. It's very user friendly and very minimal price only. May not be more prices. Let me check. Maybe if you spend around 10,000 rupees yearly, you will get a lot of tasks. See, there are two editions. You check in their website. It's very minimal prices only. There are some other websites, DocuSign, some other signing applications. They will charge more. Comparatively, in Zoho Sign, you will get Zoho Sign license. For example, 10,000 rupees. For if you go to DocuSign, they will charge around 1 lakh rupees. They will provide multiple facilities and features, but that's not required for our businesses, for minimal businesses. Zoho Sign is very beautiful. It will maximum cover maximum businesses. It will support. There are some limitations, but it's very beautiful application. If you want to use, you can use it with minimal price only. They are providing. You can check in their website, but this is very user friendly. If you want to use it, just you go on check in YouTube wherever, and also their website documents also is there. Simply, if you spend half an hour time, you can easily yourself only you can integrate this entire processes. Beyond that, if you want to connect with us, you can connect with us also. We will help you. Yeah, thanks. Thank you so much, Venu sir and team, giving this opportunity to present taxation. And also, I'm sorry to participants. I taken more half an hour after webinar timing. Anyhow, thank you so much for your supporting.